Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. So today, we'll be having a very important conversation, and we'll be talking about one very important news announcement, and that is the U.S. Federal Open Market Committee or FOMC meeting minutes. So these are minutes that are often released every 2 weeks after the official FOMC interest rate decision. And once they are released, they often cause volatility in the markets. We'll be trying to understand what this means and how this impacts the market. So first, I would like to give a shout out to Moses Owino, first person to join the house. Good morning, Charles Palmer, as well as Joseph Dijaru. Thank you guys for joining this session. So as we continue, remember the disclaimer that this session is not investment advice. And it's not a recommendation to trade. So always do your own due diligence and practice proper risk management. So also, I'm getting a very nice comment here as we start the session. Good morning. Loved the show with Dr. Kingori yesterday. So if you are just joining now and you don't know what that's about, it's an episode we did with Dr. Kingori. It was published yesterday on his YouTube channel. So I'll be sharing the link shortly. So just so we covered some important topics with Dr. Kingori. I'll be sharing the link in the comment section. I'll try to highlight these. So basically, this is the session. We talked quite a number of topics, ranging from randomness, talking about risk management, how you can actually make it in Forex. So if you have some time, feel free to go through it, and you can also share feedback on what you learned, what's new, or if you have any further inquiries. So that being said, we can cover some other stuff. So thank you for your responses. So let's get on to a different topic. What are the top highlights this morning? So one of the top highlights this morning, Japan export growth accelerates sharply. So Japan's economy rose by 7.2% year over year in January 2025, picking up from a 2.8% increase in December, while pointing to the fourth straight month of gain. So this is expected to be positive news for the Japanese yen. So outside of that, the more latest news this morning is that the UK inflation rate accelerates more than expected. So we were expecting to see data below 3%, but the actual outcome was 3%. So just to give you the minute details of what happened this morning, it's right here. So the data was released at 10 a.m. So we expected to see 2.8% inflation rate in the UK, up from the previous reading of 2.5%, but the reported data was 3%, meaning that the rate of inflation in the UK is now rising again, raising fears that the Bank of England may be stuck with high interest rates. So the core CPI came in as expected at 3.7%. This is up from 3.2% in the previous reading. So producer price index input was up 0.8%, higher than expected, whereas producer price index for output was also up at 0.5%, higher than the expected 0.2%. So for retail price index, there was a slight miss, but still an uptick from the previous reading of 3.5%. Up to 3.6%, but missing expectations of 3.7%. So clearly, inflation is on the rise. So while we have been anticipating that the Bank of England could continue cutting rates, in this case, the overall expectation is that we could be seeing interest rates staying higher for longer in the UK. So later on, we'll be looking at the reaction to this and how markets responded to this in the last 1 hour. So the major news in the morning came up at 4 a.m. and this was the interest rate decision by the Reserve Bank of New Zealand. So the Reserve Bank of New Zealand decided to cut rates by 50 basis points as expected, from 4.25% down to 3.75%. So as we have been talking about this, whenever we have a very strong expectation, central bank will be cutting rates. Normally, you expect that the currency where the central bank is cutting rates would weaken. But then we have seen it being played over and over again. And in weeks before the decision, you tend to see the currency weakening ahead. And when the news is reported, we tend to see the opposite reaction, basically showing that the news were priced in. So in this case, instead of the New Zealand dollar weakening, the overall outcome was the New Zealand dollar strengthening. So we also saw it happening early in the week. This was on Tuesday at around 6:30 a.m. when the Reserve Bank of Australia cut rates by 25 basis points. So the Australian dollar had been weakening weeks prior to that, and then on the eventual announcement date, the Australian dollar was strengthening against other currencies. So the main event for the day will be the FOMC meeting minutes, which will be coming up at 10 p.m. So when I talk about FOMC meeting minutes, we'll be trying to understand what is it and how it impacts the markets. So these meeting minutes are released 8 times a year, 3 weeks after the federal funds rate is announced, so not 2 weeks as I had earlier stated. So it is a detailed record of the FOMC's most recent meeting, providing in-depth insights into the economic and financial conditions that influence their vote on where to set interest rates. So this often comes with increased volatility in the markets. And if you check the previous FOMC meeting minutes and how the dollar index performed, you can see the average movement and try to understand the expectation for today. So try to find a page here. So sorry guys, the screen was too small to view. So hopefully everyone has access to this page. This is the Forex Factory calendar. So I'll try and share this in the comment section. So morning, Robert Kavale, Jason, Clavijak, I can see there's a good question. I'll be responding as we continue. So on the next part, I'll be looking at a deeper dive into what the FOMC meeting minutes is. But first, let's talk about the Federal Open Market Committee, what it is and what it does. So the Federal Open Market Committee is the branch of the Federal Reserve System that determines the direction of monetary policy in the United States by directing open market operations. The committee is made up of 12 members, including 7 members of the Board of Governors, the President of the Federal Reserve Bank of New York, and 4 of the remaining 11 Reserve Bank presidents who serve on a rotational basis. So the 12 members of the FOMC meet 8 times a year to discuss whether there should be any changes to near-term monetary policy. So a vote to change policy would result in either buying or selling US government securities on the open market to promote the healthy growth of the national economy. Committee members are typically categorized as hawks, favoring tighter monetary policies, or doves who favor stimulus, or centrist moderates who are somewhere in between. So the FOMC chair is also the chair of the Board of Governors. The makeup of the FOMC as of 2025 is as follows. So the chair is Jerome Powell, who was sworn in for a second 4-year term on May 23, 2022. He began his first term in this role in February 2018. Powell is considered a moderate. He tends to approach monetary policy from a moderate perspective. So he's not pro having high interest rates or low interest rates. He tries to have a moderate approach. So the vice chair is John Williams. He became president of the Fed Reserve Bank of New York in 2018. So other federal board members include Michael Barr, we have Michelle Bowman, Alyssa Cook, Philip Jefferson, Adriana Kugler, and Christopher Waller. So all these members will sit, discuss monetary policy, and then come up with a decision. So we'll be trying to understand how various FOMC meeting minutes have impacted the markets over the last 10 meetings. So once we understand that, then we'll generate a potential expectation for the outcome or the performance of the markets after the announcement today. So I used some data available from the investing.com website. So you're able to see historical data on the dollar index. And of course, you can customize here for the range you want. So in this case, I did from the 21st of November 2023 through to today, trying to understand the major changes on the dollar index. And then I filtered these for the specific days when we have the FOMC meetings. So I'll be trying to share the data, and then we see what happened during those days. So I couldn't narrow down to the specific hour after the announcement of the FOMC. So in this case, I went for the specific performance for the entire day. So on the table that you see here, I'm hoping that everyone can see this. I'll try and zoom it to make it bigger. So impact of FOMC meeting minutes on the dollar index, comparing DXY open and closing prices over the last 10 releases. So the last FOMC meeting happened around December 17 to 18, 2024. And then the minutes were released on the 8th of January 2025. So on that particular date, the DXY of the dollar index, the index that measures the strength of the dollar against a basket of other currencies, ended the day higher, having gained by 0.5%. So in the last meeting minutes that were released on November 26, 2024, there was an average gain of 0.18% on the dollar index. On the October 9th, 0.37%, August 21, there was a drop of negative 0.4%. Then there is the January 3, we had negative 0.3%. Then on May 22nd, an increase of 0.26%. In April 10, an increase of 1.05%. February 21 last year, 0.07% decrease. January 3 last year, 0.29% increase. And of course, the November 21st, 2023, there was an increase of 0.12%. So as you can see, overall, we have had a net positive performance of the dollar index since the last meeting on November 21, 2023. So if you do a quick calculation on this, the mean performance of the dollar index on the day that the FOMC releases the meeting minutes is an increase of 0.20% on the dollar index. So the median performance is an increase of 0.22%, and the projected change, that is for the meetings that we are expecting today, is an increase of 0.20%. So if you do some further statistics on the performance of the dollar index, especially on a distribution, you notice that the likelihood of the dollar dropping, let's say by 0.45%, or the dollar index is around a 5% chance, and the likelihood of a very strong rally, let's say an increase of 0.85%, also lies on a 5% chance. So the in between, which is basically a 90%, is that expectation that we should be seeing a 0.20% performance in the dollar index later today. So sometimes when you're trading, you might need to consult previous data in an attempt to project where the markets could be headed next. So we'll be looking to try this theory out as we dig deeper. For those who are into data, this was a Monte Carlo simulation. So let's see how the markets perform, but the overall expectation will be a net positive of 0.20% by the end of the day. That is in the performance of the dollar index. So that being said, let's jump straight into the charts, try to understand what are the prevailing patterns. So far, as of today, the German stock market index, or what we call the DAX, has just broken above the previous high and printed a new all-time high. So in this case, there is an overall expectation that we continue seeing further upside momentum. So these are resistance that the market was unable to break yesterday. So it really struggled into breaking into a new all-time high on Tuesday as well as on Monday. But now you can see that the market is now pushing higher, raising the likelihood of a strong movement upwards from the current price action level. So for those who are interested in trading indices, this has been one very good candidate that has been performing really well since the year started. So that being said, let's go back to a number of assets. So number one, is the dollar index. So if you look at the dollar index, since the market opened today, the overall performance has been a bearish momentum. So this was the closing price yesterday. So we went slightly up by 0.03%, and then we went all the way down by 0.15%. So currently, the dollar index is making a recovery, but it is still down 0.06%, basically implying that the dollar index is a little bit changed. Of course, we will be expecting to see increased volatility later in the day once the market opens. So with that in mind, the increased volatility is expected to be a positive, as we have seen it with the data. And in this case, we're expecting an increase of 0.2% and a median increase of 0.22%. So a median increase of 0.22% from the opening price would be, I'm trying to draw this. Let's see, from the closing price yesterday, I'll use a smaller time frame. And then we try to project 0.22% increase. So a 0.22% increase would be 107.129. Yeah, this is pretty close. So from the hourly time frame, 1 hour, we expect the dollar index to rally and get at least 107.13 or 129 from the current price level. And this would imply that the dollar index might be strong for the day. And with this in mind, then there is quite a number of considerations to make. So one of the slowest currencies being the Euro USD. If the dollar is strengthening, then that basically means that we could be seeing the euro moving further back downwards against the dollar. So far, you can see that the euro is really struggling to break the upper trend line here ever since it entered into this flag. And now that we're expecting the dollar to strengthen, then the overall expectation is that the Euro USD now drops towards the lower trend line. Of course, this doesn't have to be the target. It could be anywhere in between. But the overall expectation is that the market moves towards the lower trend line. So for pound USD, this has been the major support area. So if we adjust our trend line here, we have a very strong resistance on this area. So in this case, potentially the market remaining within pattern and getting towards the lower trend line. So for AUD USD, this one has been quite volatile, mainly as a result of the decisions by the Reserve Bank of Australia that happened on Tuesday in the morning. So in this case, you'll notice that there was increased volatility, but the market still has remained sideways. So if you had to think of this market and the way it has been performing over the last 3 days, then the overall expectation is that the market remains within this pattern, and a strong dollar would work against the Australian dollar, potentially moving back towards this area here. So as for the yen, having seen the strength of the yen, and now that the dollar is regaining again, it seems like the market is losing in terms of volatility. So notice how we projected that the price would move back downwards yesterday. And what actually happened is that the market changed direction and started going down, but it didn't quite get to our target area. So as a result, now we are seeing this market pattern appearing, where we are seeing a sequence of highs and lows that look more of a consolidation, more like a consolidation here, where the market seems to be moving sideways with a slight gradient towards the upper side, basically indicating that the market could be moving higher. And with our projection that the dollar could be regaining some strength, we could be seeing the market retesting the previous high here. So Nikkei 225 index still remains within this range. So it's something we have been tracking with opportunities appearing on each edge. So right now we are closer to the middle. So no opportunities for now. And of course, for gold, we are about to hit a new all-time high. So we discussed these yesterday. We talked about the triangle here and a potential break. So the break played out. The market pulled back for a while and then eventually rallied to our target. So got really close to 29.39, and as of this morning, you can see an attempt to break above that. So remember, this is a new all-time high for gold. So potentially, this could work as a major resistance, and of course, it could also be the launch point for a new all-time high. So remember, the target overall, we are still expecting gold to touch $3,000, and the highest we saw was around $29.42 per ounce of gold. So if we break above this, then we could see a strong rally to $3,000. So Brent oil has continued moving higher. So we talked about the market eventually hitting this area and getting a rejection. So that was the main topic yesterday. So we expected the market to hit this resistance and move backwards. So it played out as expected. The target was met, and then the market dropped all the way to the Asian sessions low before bouncing later in the day. So today we are seeing a breakout above that area here, and now the next target moves from that particular area all the way up to 76.456. However, remember the long-term prices in oil are bearish. Remember, Trump is advocating for more oil supply to drive prices lower. So even on the daily time frame, since Trump was inaugurated, on this particular date, marked by the vertical line, notice that oil prices have generally been moving downwards, though we are seeing a very strong support at $73.921 per barrel. So we have had 2 consecutive days of bullish momentum in oil, and today might mark the 3rd consecutive day of gains. But then once we get to the resistance levels, there will be more opportunities to go for short selling opportunities. So while now the market remains fully positive, at some point we expect the prices to be moving backwards. So on the other hand, for the Nasdaq, we got another all-time high yesterday before price dropped further back downwards. Then later recovering towards midnight, and today it seems like we might be trading within the range of yesterday. So the range of yesterday is basically the difference between the highest price and the lowest price that we saw yesterday. So this range might be determinant of the momentum of the Nasdaq. So this is the highest, this is the lowest, and we expect prices to remain within here up until 10 p.m., where we'll be expecting to see more volatility in US equities after the announcement of the FOMC meeting minutes. So for now, we could be seeing the market remaining within this range. So let's just be patient and wait to see if there will be opportunities. So same case for the US 30. So if you look at yesterday's range, that was the high, this was the low, and the market is still in between. So no signs of reversal or continuation, just the market playing within this range here. So also for the Russell, for the SP 500, is the same expectation. Whereas for Bitcoin, we have been following this pattern for a while. So we can say that for the highlighted area, Bitcoin has largely been moving sideways with a slight channel indicating that Bitcoin could be moving lower. So if you look at the sequence of highs, they have been getting lower. And of course, if you look at the sequence of lows, they have also been getting lower. So if this is a bearish channel and Bitcoin just jumped from the lower trend line, then the overall expectation is that we at least see a pump moving towards the upper side. So potentially hitting $97,600 per Bitcoin. So that was a very strong bounce from yesterday's low, and we are seeing prices accelerating higher. So as for the dollar index, we already seeing this playing out. So the overall expectation is a bullish momentum. And then for the dollar trading against the Swiss franc, this is where we are seeing the biggest gains for the dollar. So while yesterday we were expecting a retest of this area, the market extended to the Asian low. This was the lowest price that we had seen in the Asian session. So these tended to be the support area, with the lowest price being here. And then the market continued moving higher. And now it seems like the Swiss franc is now the weakest currency in the market. So for the New Zealand dollar, after the announcement of a 50 basis point rate cut, the overall expectation is that you would see the New Zealand dollar weakening. But instead, what we got is an increased volatility this morning, a sharp drop followed by a sharp increase, meaning that the news were already priced in. So as for looking for the potential target, potential asset that you would consider trading as the news comes up later in the day, then we might compare how currencies have been performing since the day opened. So far, the New Zealand dollar seems to be the strongest and the Swiss franc seems to be the weakest. So if you look at the weekly performance, you'll notice that the Swiss franc has still been the weakest currency compared to the dollar, while the Japanese yen has been the strongest. So if you look at the last 1 month, the Swiss franc has been the one with the weakest performance compared to the dollar, whereas the pound and the yen have made big gains against the dollar over the last 1 month. However, if you look at the year-to-date performance, the yen, Australian dollar, New Zealand dollar, all Asian pairs have been really making good gains against the dollar, whereas it's only the Swiss franc that has made the smallest gains against the dollar. So that being said, and with an overall expectation that the dollar might strengthen later in the day, then you want to trade it against the weakest currency. So in this case, a very strong gain in the dollar might as well be paired with the weakest currency in the market. And in this case, among the major pairs, it makes more sense to pair it against the Swiss franc. So as for the chart of the day, you should be really focused on the USD CHF currency pair with more buyers that there's a likelihood that the dollar gains more. And if it continues gaining more, then it could make a move towards the upper side of the trajectory. So in this case, moving towards this trend line here, which marks the sequence of highs we have seen in the previous swings. So in this case, a potential move towards this area here. And this is for long term over the week. But then for over the day performance, you'd notice that there's still more ground to be covered. So we have already approached the high that we saw here. And this was on the 14th. And we could be now moving to the next available area. Of course, if you look at these areas here, you notice that this bottom versus this bottom marked an area that was acting as support, now could potentially be turned into a resistance area. So we could be seeing a potential run to this price action level, and this is around 0.91. Yeah, so this is a 0.91 price level for USD CHF currency pair. So that's all. That's it for the day. I'll be checking on the comment section to see if there's any questions that I may have missed. So one of them, going by the historical data that you've just analyzed regarding the FOMC minutes on DXY and the rate cut by the Reserve Bank of New Zealand and its dovish tone, would that make the New Zealand USD good for a huge sell-off? Well, what we have seen is that the New Zealand dollar has actually gained instead of losing after a massive 50 basis point cut. So this means that news were already priced in. So the people who needed to short the New Zealand dollar already did it weeks before the announcement of the rate cut decision. So in this case, we are seeing the opposite reaction. So personally, I would go for the Swiss franc instead of the New Zealand dollar. And we have seen from the performance of currencies that the New Zealand dollar has been one of the strongest currencies in the market since the year started. Why Germany stocks not affected by elections? So despite what we normally experience here in Kenya, where elections tend to impact stocks negatively, what we have seen in the Western world is that in most cases, whenever there is elections, the stock market tends to perform better. So in this case, we are seeing a net positive performance, even with German elections incoming. So there's a request to check on pound yen. Where is that? So pound yen making a very strong comeback. So remember, what we had in the morning was CPI data coming in hotter or stronger than expected. So with a hotter CPI, what we are seeing here is a market that was moving along a channel downwards. But now, for the last 3 days, it has been unable to form lower lows. So now with this data indicating high inflation, then there's that strong likelihood that we see the pounds in the market heading to this area here, closer to the day's high. So potentially, we could be seeing yesterday's high as a target as the market approaches the upper trend line, which has been the basis of resistance here. So, guys, we mentioned about crosses. When we do pound USD and then we do Audi USD, then pound Audi is basically, I would say, a derivative of the same. So we cannot be able to cover all the crosses in a short session. So thank you, J Squad, for the nice response here. So we really tried to bring this education to more people and basically help more people gain the skill in trading Forex so that they can make something for themselves. So last question that I haven't covered. Yesterday I was asking an asset like JPY pair, realistically how many pips can I target for TP? So just the same approach I've used with the data. It's better off to do more of a data analysis. And the way you do this, if for instance you are considering trading an asset like let's say USD JPY. So if you're looking at USD JPY, you can easily find the daily range. So for instance, if you are talking about the daily range for yesterday, you look at the highest price yesterday, and then the lowest price yesterday, and then you measure the number of points between this range here. So this was a movement of 989 points, or basically 98 pips for yesterday. So if you do that for like 100 days, you will find an average and understand the average movement of USD JPY. And of course, you can even finesse your data and remove the outliers. Outliers are things like bank holidays when there's a little to no movement, or the days when there's major news announcement, when there's an overblown reaction in the market. So once you do that, you try and understand the range or the median price movement. And once you understand that, then you'll know the expectation of the number of pips for that particular pair. So yes, there's still more work to be done, which you can easily do across the MetaTrader 5 trading application. It's a very simple approach. So, of course, I would like to remind you that we still have the podcast, that is the Bullish Banter podcast. So our latest episode was with Jesse, and we'll be uploading one more today. So make sure to check it out. It's available on all podcast platforms, including on YouTube. So you can check it out here. So in our last episode, we talked about the triple threat, Stargate, AGI, Trump tokens, as well as the tariff tremors. So make sure to check it out on YouTube. Just search Bullish Banter or just go to the FX Special channel. Like this, just click on the channel, click on the podcast subtitle here, and then you'll get all the episodes. And once you go through them, hopefully you get to gain more insights on what's currently happening in the markets, and hopefully that will help you in your trading journey. So thank you very much, everyone. Of course, I always appreciate when you like the video, you share your comments. If you're watching this on X, remember to like and retweet the video so that you can reach more traders. And I hope that you guys have an enjoyable day and a profitable week. So that's all for the day. Enjoy the rest of your day.